Anish from BlackBull Markets. Behind me, the New Zealand dollar against the US dollar. It's been in absolute free fall over the last 12 hours. We're here doing this video at 3:20 in the morning in Auckland, New Zealand. 2% fall in the Kiwi against the US dollar, with bears firmly eyeing a break now of that 70-cent level. We've passed some key support areas, particularly that at 71.40. Now, why is this falling? Well, the New Zealand government came out today to introduce a new policy to adhere against speculation in the NZ housing market, and that is by taking away tax incentives for investors for property within New Zealand. Now, of course, if you've been following the New Zealand housing market similar to that of Australia, it is overheating. There is a bubble, and some will argue against that theory, but the fact is prices have been rising and rising and rising, causing a lot of issues domestically for Kiwi homeowners, first-time buyers, and of course pressure on the government to help first-time buyers get into the market and to clear the rental against homeowners ratio. Now, what we can see in the Kiwi dollar is that firmly impact this whole macro case, really causing a sell-off in the Kiwi dollar, which is interesting because a lot of this weakness is coming from the Kiwi rather than the dollar's strength play. Now, if we go to a daily time frame, rather, we can really see this support in action here, the 70-cent mark. This is what bears are eyeing. Now, if we do get a clearance of this 70-cent mark, there is nothing really stopping the Kiwi from hitting 67.125, which is the 38.2 fib ratio. Next in line, of course, we had that break of that beautiful trend line that had been held ever since the 11th of May 2020. Break of that trend line lower, signal to sell there. If you took it, if you're holding on to that sell, you'll be in the money. You'll be looking at potentially taking profits around the 70 cents, or if you've got the balls, you want to go and take this low and potentially look at grabbing another 200 odd pips. Of course, this is a big shift especially for overseas demand for the Kiwi dollar, and appetite potentially to sell the Kiwi could continue, especially with investors looking to take profits over a very nice long period of Kiwi strength. So, possible plays here. Let's see. Bull case. We're getting a bounce off that 70-cent mark, and we're coming back to retest that trend line around the 71.40 again. However, the bear case is what we're seeing right now. When the markets fall like this, you don't want to try and catch a falling knife. You could see a break of 70 cents and an entrance into this new trading zone all the way down to 67.125. So we could potentially see the Kiwi break lower into this new trading zone and operate within this area. Again, you've got some resistance here pointing back at the 67-cent mark. Beautiful double top that formed in August, and we could see a new structure form in the Kiwi dollar. So let's see what happens. The next 12 to 24 hours could be very interesting to see how this plays out, but do keep your eyes on the Kiwi dollar, biggest mover in the FX market today. All the best of luck with your trading.